Hey, just got off the phone with a client and just had a great conversation about downsizing. So this couple is retired. They are thinking about downsizing, but they've been in their home for about 15 years. They have a lot of equity in the home. And the concern is, of course, rates have moved higher. They have a great rate right now. Does it make sense? Is this the right time to buy? And so their main I guess mental struggles that they were dealing with are they have some pension, but they do not have a lot of other liquid assets. And so that's something else that we wanted to try and solve. And so here's what I showed them. Let me share my screen with you. Okay, so these clients, their current home probably would sell for about $1 million. They owe $500,000. They have a 3.25% interest rate. Their payment right now with taxes and insurance is just under $3,200. If they sold the home, they would net about $500,000. So instead of putting all the money down, which really went against their goals of having some more liquidity, I showed them how they can go buy their right size, downsize home, whatever we want to call it, for about $650,000. So a lot less square footage. And instead of putting down everything, put down about $250,000. So we're financing $400,000, putting down $250,000. That leaves them another $250,000 liquid that they can use as they would like. Even though interest rates are higher today, that payment is still going to be, with taxes and insurance, $428 less than what their current payment is. So that's going to help them from a month-to-month standpoint. And so the other solution that I wanted to show them is, what if they take that $250,000, the rest of their net proceeds, let's say they invest it, they get a 7% rate of return. At the 15-year mark, that $250,000 would have grown to $712,000. So that is huge because now they have reduced their payment by $400, gotten into the home that they really want to be in long term, and then we've shown them a strategy to be able to grow their net worth and their liquid assets, which are much more important, I think, if you're on a fixed income than equity in a home, because of course you can use it to prescription, medical costs, things like that, travel, even some fun stuff, of course, right? And this is not even, this final piece of the puzzle was that I said, like I'm having the conversation with most clients, rates are here now. It doesn't mean they're going to be here forever. So with the Fed hiking rates, very good possibility that will push the country into a recession. That seems to happen over the last 50 years, every time. And so with a recession, we'll probably see lower mortgage rates. So I'm going to be able to get them up, refinance down the road and still continue to increase those monthly savings from what this new payment will be. If this is something that you feel like could benefit you or anyone you know, please reach out. I'd be glad to help and show them some numbers. Having the interest rate move higher should not be, from the current loan, should not be a reason why someone who is ready to make a move, puts everything on hold. All right. Thanks again. Have a great rest of your day. See ya.